There will be another.
Neil, how has COVID-19 affected the real estate investment and deal activities across the region? And has it affected other asset classes as well?
It has. It's had a big impact for it. So volumes are down about 38% year on year for this quarter. It's been a fairly torrid year in terms of transactions since COVID kicked off. So 2019 was a really active year, record volumes in the third quarter. We've seen a really big pullback in portfolio sales. So we've seen the majority of transactions happening on large scale single assets, often in what investors regard as safe haven markets. So it's been really centered actually, activity on markets which have active domestic investors. So the South Korea, Taiwan to some extent, Japan. When you look at what happened last year, the South Koreans put a huge amount of capital into Europe in 2019, close to 19 billion. When you look at what's happened this year, that's slowed to a trickle, and all that investment has gone into their own market. So one of the key themes we've seen is the rise of investment in the near neighbors. So investment into your own market or markets nearby. So the travel restrictions obviously impact the cross-border investment. So we've seen primarily a move towards safe haven markets and markets which rely on cross-border investors, and that's Australia, that's Hong Kong, that's Singapore to some extent, have had a really big drop-off. Australia, for example, is down about 45% year on year in terms of transaction volumes. Though I am confident or positive that hopefully the announcement of this vaccine means that next year we'll see a return to some travel. So there is some light on the horizon.
Well, that's good news. When you look at this year, the year 2020, we are clearly facing a global economic recession. What lessons can you derive from previous recessions with respect to investors' perspective, with respect to property and other investments?
It's really interesting because this downturn is very different to the GFC. GFC, we saw a very abrupt stop that started with the US markets. It was very much a financial crisis, a capital markets crisis. It started in the US and spread to Asia. What we've seen with COVID-19, it started in Asia, it spread to the rest of the world, and we've seen Asia come out of the crisis ahead of the Western economies. We've also seen it as more of an occupier crisis, not so much as a capital markets crisis. The government stimulus that has been injected, and also the central banks injecting a huge amount of liquidity into the system, has really propped up the capital markets. The cost of financing has dropped substantially, about 100 basis points across Asia Pacific. So cap rates are really well supported. We haven't seen cap rate compression really, but we haven't seen them blowing out at all. So this is more of an occupier crisis. I think where we'll see softening in prices is really from rents falling. And where that's going to happen, we're seeing that happen more in the CBDs, less so in the metro areas. Also, we've seen COVID really speed up the transition from a lot of the normal retail into e-commerce and into industrial. So that market of logistics and distribution centers are in huge demand, and that's something that's really been brought about by COVID, expedited by COVID. So we're seeing a lot of capital trying to get into that area as well.
And what opportunities would you see in emerging markets in Southeast Asia? Will you see more cross-border capital going into these markets, including the Philippines, Indonesia, and maybe Thailand?
Yes, absolutely. I think so. There's no doubt there has been a drop in capital going into the emerging markets over the last 6 months. A lot of fund managers have focused on safe haven markets. That is now starting to change, and really where we'll see it, I think, is from people coming in to develop industrial and logistics products in those emerging markets. So seeing Singaporean capital, US capital really active. looking to get into areas probably on the fringes of the metro areas to develop logistics centers which are in high demand. I think that could be something where there's some opportunities probably in the Philippines. It is looking at maybe those developers that have large land banks that need to finance developments in future and might look at selling off some of their land banks, which would be in high demand for these distribution centers.
Finally, you have so many years of experience in the property market, yet this year clearly there's so much fear and uncertainty. What is your advice to investors right now?
I think it's important to look back at structured investments. So sticking to areas where there's fundamental demand. It's really, I think we should be focusing on the occupier market and getting products which will be in demand by the occupiers. One of the other areas we've seen is the rise of the metro markets, particularly the office markets in metro areas. So COVID-19 has had the impact of people not coming into the CBDs as much, not wanting to come into the CBDs. And therefore, we're seeing rental falls in the CBD office towers. I think the metro office area is where people are more comfortable going into those type of assets. Also, rental falls will be much more limited because we didn't see the big rental spikes that we saw in the CBD. So just looking at those macro trends, the rise of industrial and logistics, and also that move towards probably more metro markets in the office sector will stand investors in good stead.
Very good. Thank you.